So like in most cases when it comes to investing, there is no one right answer for any of these things, but perhaps best illustrated with some example. We had a case wherein a very bright entrepreneur came to us with just an idea, but the most important ingredient before an entrepreneur approaches an investor is how passionate are they about the idea and what really is their vision behind it, because that can really sway and have a major impact on how we look at how an entrepreneur looks, how an investor looks at a funding opportunity. Like in most cases, the answer is it depends. And it depends on what is the need of the startup. So let's first start with what is the minimum requirement before an entrepreneur even approaches an investor. The minimum requirement is that the entrepreneur has a burning passion to make that idea come true to life, number one. And second, has done enough thinking to find a viable value proposition which will appeal to the customer. So you need to have a point of view which is thought through deeply, is nuanced enough so that you can explain it clearly to the person on the other side. So at that time you're ready to approach funding. But, and this is an important one, not all startups require funding when they start out. And that really depends on the person who is behind the company. You'll see examples of companies which have gone through several iterations completely bootstrapped, or companies which actually got funding right when with just a PowerPoint. So I would say that there are fundable ideas. A lot of ideas are fundable ideas, but it really depends on the entrepreneur whether they want to go ahead and get an investor in, because it comes with a lot of other issues around it as well. So let's take just two quick examples here. In case number one, you can have a company wherein you have an idea, you have enough money to go build a product, and you actually bring it to a certain stage wherein you can demonstrate that it is valuable. At that point, it certainly is ready for funding. Case number two could be where the product or service requires a lot of capital to get off the ground to begin with, before you can even prove that the company is that this is a valuable product. In that case, you need the funding right from the word go. So think through what are the capital requirements for the product. A high capital requirement product needs funding immediately. A low one, you actually have several choices. And the recommended path from an entrepreneur standpoint would actually be to bootstrap the venture for as long as they feel financially comfortable, and then go ahead and seek funding. So first and foremost, be very clear on what the team is. If it's one person, two people, or three people, just make very clear that the team is aligned with respect to what they are going to say, when they are going to say, and what their individual roles are. It is very frustrating for somebody who's looking at a startup as an investor to find that the roles are not defined, because that means that a serious level of conversation has not happened with respect to how the company is going to be built. So this is an important point. Even one step before that is what I would call a pitch. So tactically, you need to have a set of slides or a couple of pieces of paper. Slides usually work best, or it could even be a video, but something which is visual, which you can engage the other person with. So you need that. And now the question is, what is inside that particular deck? There are several web resources out there which can tell you what are the basic things, but think about concentrating less on the material on the slide, but more about just using that as a supporting document for you to actually make the case, because you're really telling a story. So think about this. You and your team are storytellers. You're really telling a story, and that story has to be engaging. And if it's an engaging story, which people like to hear, and they think that it has got an interesting and exciting entrepreneurs behind them, you're really on your way there. So there is the story, which is like the content itself, then how you deliver the story, which is the engagement part of it. And I would I cannot stress the importance of practicing that particular delivery, because it takes effort. We all make mistakes when we actually do it for the first time. So take the time and effort to do it, because it shows that you care and this is serious business. And if you actually fumble on basic numbers or some basic assumptions you are making, the person on the other side will probably discount a lot more than you think. Don't be upset or surprised if an investor is showing impatience. And the reason is, it's not that they are disrespecting the entrepreneur, it is just that they're probably seeing a number of pitches in that particular day. And so getting to the point quickly, having a coherent story, delivering it in a compelling fashion, and then having a really strong team behind it which knows what each other are about and what their roles are, is probably the essence of what you need to be prepared for before you come in for a funding pitch. One thing which has to be very clear here is that what is your ask? And the ask is the money in this case, among other things. You might be asking for other contacts and partnership related stuff as well, but it's principally about money. So be very clear how much money you're really asking for and why you need it. So what is the plan behind that money? So you might say that my current team is so much, I want to increase it to this particular level, and these are the milestones I need to hit, and this is what I'm going to do with the funding which I'm seeking. And in that particular plan, show scrappiness, right? Show that you are going to be really diligent with the money which you're going to raise, because your goal is to build an exciting, successful company. So you're looking for a plan, you have a specific ask with respect to how much or the range which you wish to raise, and a detailed process of how you are going to raise that, use that money over what period of time. And that will actually, you can end the pitch that way or you can start the pitch that way. But it's important that you leave sufficient time to actually have that conversation. What is the duration of the plan that you need to show here? I would say that show a 2-year plan with a monthly breakdown of the first year plan. So show the first year plan month by month, 1, 2, 3, 4, month 1 being whenever the funding is given. And the second year you can show it by quarter, so Q1, Q2, Q3, Q4. And the third year you might just have like a much more broader. Remember that the investors will typically discount what the projections are, because entrepreneurs always have rosy projections, and they are congenitally optimistic, that they need to be optimistic. But the near-term plan needs to be very solid, and you can have assumptions and variations after the first 12 to 18 months, but have a lot of focus to make sure that the near-term plan is properly detailed out. And you can show a 3-year plan to show, or even more, to show what the potential opportunity size is. But remember that folks will discount that, so don't spend too much time on that. But make sure that the first 12 to 18 months is well detailed out with respect to your costs as well as the revenues and what is the basis of it.